What's up, degenerates? Welcome back to another video. Just wanted to cover a few things that is happening in the overall market and what I expect in the near term. Now, the Federal Reserve is still tightening financial conditions, albeit at a slower pace. So a few weeks ago, Jerome Powell came out and confirmed that they're going to be slowing the pace of rate hikes in the December meeting, most likely. Now, if I look here at the Fed rate monitor tool, this is on investing.com, you can see that the chance for a 50 bips rate hike in December FOMC, which is next Wednesday, is 78.2%, and a potential for a 75 basis point increase of around 22%. So what actually happens next week? This is largely priced in at this point. If somehow Jerome Powell comes out and does a 75 bips hike, then the market's going to head south. Now we had the PPI, which is the Producers Price Index, which was above forecast at 6.2% for core PPI and 7.4% for PPI. Now this is a leading indicator of what consumer prices are, because this is based on what manufacturers are pricing their goods. So that's something to watch, and the Fed probably has an eye on this as well. And so if CPI or PPI continues to raise and continues to increase, then most likely the Fed is going to continue to raise rates and try to stop inflation from getting out of hand. Now, a few other things. So we'll have the meeting on Wednesday, so we'll see what comes out of that. So a lot is going on next week with OPEX week, option expiration week on Friday. We also do have here, if you're looking at the calendar, you can see that we have on the 15th, we have AM settled equity index options, as well as futures equity roll dates, which you can see here on the CMU's website, is on the 12th. So usually this causes a volatility pocket as contracts are rolling from one month to the next. And so this is quarterly futures roll. And so fully expect to see some volatility starting on the 12th, which is on Monday. And that will probably continue through Friday. Another thing to watch out for is we do have ex-dividend dates coming up, and a lot of those dividends get reinvested, and so there's a lot of buying pressure on certain days for QQQ, which is one of the larger ETFs. That's on 12/19. That's the Monday after next week. And then we do also have for SPY, S&P 500 ETF. It doesn't have the date in here yet, but it's most likely going to be next Friday. So I do expect a lot of volatility next week, and I think Friday actually might be a great day to buy zero days to expiration call options on SPY. Or from a technical perspective, if you look at the S&P 500, it has rejected off this 200-day moving average multiple times so far this year. We've been in this downtrend. You can see that we did try to push above here a few times and then broke back down lower. So right now we are starting to bear flag out from reaching that point. If you do look at the overall upper trend line, we did have a test there as well. So this is pretty much confirmation at this point that we'll likely see a potential push lower. So if you're in our Discord, you can see that when this line was touched, a lot of us played shorts, and so far we've had that rejection as expected. Now, if price does sell, I do expect it to come back down and test that low from October and potentially even break it lower, but this is most likely probably into next year. I do think because the Fed is still tightening, we don't have fiscal stimulus like we did when the COVID crash. The Fed is doing all the things that show that when we start to pivot and slow the pace of rate hikes, that's when things are actually getting bad, and the Fed is not lowering rates yet. So at some point, prices will head lower, the real economy will roll over, and then at some point the Fed is going to start to lower rates again, and by doing so we'll have an ultimate bounce to the upside, and that's when you really want to be getting along in the overall market. Same setup here with tech. We did have a test here Well, it actually didn't quite make it there, but you could see that we're starting to roll over there as well. Didn't quite get up to the 200-day. Small caps, IWM I'm looking at here. This also rejected off of the 200-day moving average. And the Dow actually broke back into a bull market. So 20% off a low is considered a bull market, and we actually did technically make that headline, but we've since rejected down below. Now, I do think the Dow is going to come back down and test this trend line, and if that breaks, we will see a larger capitulation move to the downside. That would be considered a false breakout. So whenever you have a false breakout, usually you'll see an equal and opposite reaction, a stronger move to the downside. The same thing happens if it's a false breakdown. So like here, price broke back down, but then you had this really strong move to the upside. So the market likes to move in waves, and fully expect it to do that over the next coming weeks. Get a test of that trend line. If it breaks, it's a good setup to go short. Now, I'm not going to show you any individual stocks in this video. This is just like a sanity check for the overall market, where things headed in the next 3 to 6 months. Really look at for the levels. Stay safe out there if you're trading options. If you're looking to go long and buy shares, I'd highly recommend just waiting, saving up as much cash as possible, and then deploying it when things look really grim and the Fed is starting to consider actually lowering rates at some point. And that could be late next year. You know, all this could really take some time to play out and filter through the economy. So stay safe. I'll see you in the next one, and we'll probably get into some more individual stock setups that I think you'll get a lot of value out of. So make sure you hit that subscribe button, and I'll see you in the next one. Peace.